can run a profitable LLC yet lose thousands of dollars to penalties or blown tax breaks the moment you transfer money to your personal account. So stay with me for the next few seconds and I'll show you the exact step-by-step framework that you need to use in order to pay yourself legally and minimize taxes, as well as protect your liability shield inside of your business. Also, just as a quick note, if you guys want to get started with an LLC and you don't already have one, I would definitely recommend using a service like LegalZoom. They're one of the best ways to get started with an LLC for the cheapest price possible, and they have some amazing options that you can choose from. Just simply click that link down in the description and it should take you to a page that looks something like this one. As you can see, you can get started with LegalZoom pretty much completely for free. All you have to pay is the filing fee for their cheapest available option. Once we're on this page right here, we'll simply select what type of organization or specific type of entity we're trying to create. We'll go ahead and pick a name for our LLC, make sure that it's an available name, set up all of the sub data for that, and then just like that, we'll have our very own LLC ready to go that we can start using to run our business from. Having an LLC is ultra important, especially when it comes to paying yourself. If you don't already have an LLC, make sure to get started with LegalZoom by using that link down in the description. But without further ado, let's show you how to properly pay yourself inside of your LLC. That way you don't make any mistakes. Now, step one is going to be to open last year's tax return, or you'll have to call your accountant in this case. That way you can confirm exactly how the IRS sees your LLC. If you're the sole owner of an LLC and have never filed an election before, the IRS will treat you as a sole proprietorship, and every dollar of profit flows straight onto what's called a Schedule C. If you have partners here, you're a partnership by default, which actually splits your profits through what are known as Schedule K1 forms. These are basically forms that work as your annual tax return that you file with the IRS, but it's split obviously into partnership forms because you have a partner. If you filed Form 2553, you're basically now considered an S Corp, which is much different than just a regular LLC or a partnership. This means that if you're an S Corp, you must run payroll completely for yourself before taking any dividends. If you elected C Corp status with Form 8832, you'll face corporate tax first and personal dividend tax later down the line. Knowing this label up front can actually dictate whether your paycheck is just either a simple owner's draw or a guaranteed payment, a W-2 salary, or it could even be a blend of wages and dividends. But of course, ultimately, without this clarity, you risk misclarifying on income and triggering back tax assessments and erasing the liability protection that you formed your LLC in the first place to get. If the IRS sees your LLC as a sole proprietorship or even as a partnership for multiple members, your absolute cleanest move here is going to be an owner's draw. This is basically a transfer that happens inside of your business bank account where you take the cash sitting inside of that account and basically just transfer it over to your personal account. Then you just record it either in your bookkeeping software or inside of the memo inside of the transfer and label it as a owner's draw. It's also probably a good idea to keep a running total inside of your capital account. That way you never pull out more than your cumulative equity. Also remember too here that no payroll taxes are withheld for you. So set calendar alerts to pay quarterly estimates for income and self-employment tax, which is going to come out to about 15.3% and up to $176 to $100 Social Security cap. There's also the 2.9% Medicare tax and also a 0.9% additional Medicare if your personal earnings top over $200K if you're single, or $250K if you're married filing jointly. If you and at least one of your partners want predictable compensation before profits are finalized, you might want to consider setting up a guaranteed payment. This is basically something that you can write into your operating agreement, which basically allows you to run a fixed account transfer or business check each month from the LLC's account to your own personal account and book it as a guaranteed payment for services. In the actual ledger itself, the amount actually shows up as an expense on the partnership return, which actually ends up lowering the firm's taxable income, and it still appears on your K1 as ordinary income subject to self-employment tax. By locking this payment in advance, you smooth out your personal cash flow, keep draws and capital accounts clean, and avoid partner disputes when quarterly profits end up swinging in either the up or down direction. But it's always a good idea to review cash reserves first, so that way LLCs never issue a guaranteed payment it can't cover without dipping into its debt. If your LLC has elected S Corp or C Corp status, you must treat yourself like any other employee. Run a real payroll through reputable software, set up federal and state withholding, and issue yourself a W-2 that reflects a reasonable compensation based on industry surveys, hours worked, and the skills you provide. Because the Internal Revenue Service can reclassify low or missing wages as unpaid payroll taxable income, make sure to slap on 100% trust fund penalties and demand back Social Security and Medicare. Once that W-2 salary is on autopilot, only then can you distribute remaining profit as S Corp dividends, which are going to be free of payroll tax, or C Corp dividends, which are going to be taxed again at the shareholder level, locking in both compliance and the strategic tax split that Congress intended. After you've paid yourself a market rate salary through payroll, you can move leftover cash with a formal board or member resolution. For an S corporation, you can declare a shareholder distribution, transfer funds from the business account to your personal account, and code it as a S Corp dividend 2025 Q2. And remember that this amount skips payroll tax, but it still will ultimately land on your K1 for income tax. For a C corporation, make sure to record the same transfer as a dividend. Issue your Form 1099 div by January 31st and expect double taxation. First on the corporation's Form 1120 at 21%, then on your personal return at qualified dividend rates. Make sure to run these numbers with your CPA to confirm that any C Corp dividend you take still nets more than tax earnings, then returning the earnings for expansion or paying yourself at an additional deductible salary. And of course, regardless of your tax classification, run every payout through a disciplined 4-part routine. Keep business and personal bank accounts strictly separate. Move cash only from the LLC account to your personal account on a scheduled or payroll cycle. Annotate each transfer with a clear memo like owner's draw 2025 Q3 or W-2 salary August 15th. That way your books trace every dollar and immediately update your tax calendar to cover the liability that transfers end up creating, whether that's quarterly 1040 ES for draws, same day payroll, withholding for wages, or even year-end 1099 div reports. Following this checklist each time preserves your liability shield, keeps the IRS happy, and ensures that you will never overdraw capital or stumble into surprise penalties. Also, just as a quick note, here's 3 simple errors that sink more LLC owners than any complex tax code. Drawing cash from an S Corp before running payroll, paying personal bills directly from the business account, and skipping quarterly estimates. Protect yourself by always processing wages first through payroll software, transferring money to your personal account, and never straight to a vendor before settling private expenses, and ultimately automating 1040 ES debits. Looking ahead to 2025, make sure to lock in every remaining tax break by taking a final pass-through of 3 planning levers. Keep your pass-through status eligible for the 20% QBI deduction while it's still alive, meaning that S Corp owners still above roughly 241,950 single or 483,900 joint must leave enough W-2 wages on the books to satisfy the wage or property test. And of course, wait the S Corp election only if your net profit will clear about $50,000 after a market rate salary, because anywhere below that threshold, the extra payroll software, quarterly 941s, and state unemployment filings can erase pretty much any payroll tax savings that you're going to get through this. And of course, make sure to fund retirement through a solo 401k or SEP IRA before year end, using salary deferments to trim FICA or owner draw contributions to reduce self-employment tax. So you shift more profit to compound tax deferred instead of handling it to the IRS. Make sure to also match your pay method to your LLC's tax status and document every transfer. Hit your quarterly tax dates and you'll pull cash from the business with 0 penalties and a fully intact liability shield. So make sure you put today's checklist into action and schedule your next owner's draw, so that way everything is all good to go and ready. Once again, if you guys don't have an LLC yet, or if you want assistance in doing this whole process with some actual tax professionals, you can use a service like LegalZoom, which we'll have a link to down in the description. description. Very easy to get started with, and I highly recommend them. I use them in my own business on a day-to-day basis. Also, please remember that the links down in the description are affiliate links, and we could financially benefit from them at no extra cost to you. Thank you so much in advance for supporting more videos like this one. Make sure to hit that like button and subscribe so you never miss any of our future videos. Other than that, I'll see you guys in the next video.